All right. Hope you all can hear me, right?
Yes, we can.
All right. So
Yes,
now
we
what we're
can.
going to start with, we're going to start with our trading view. As of yesterday, we talked about how to navigate through your trading view, how to select time frame, how to select the token or asset you want to view, how to draw your trend lines, how to add arrows, what arrows are for, what long positions, and all of that. Now, today I'm going to start with support and resistance. As of day today, when we are having issue, I think okay, that was yesterday when we are having issue with our link. I talked about support and resistance, but I want to do it as a specific topic tonight. All right. So when you hear about support and resistance, all right, support simply means when the market is going down at that point of rejection is called what? The support. Why the resistance is when the market is going up, at that point of rejection is called what? The resistance. Now, support and resistance can serve a very serious purpose in the market. Whereby it can help you determine your stop loss, can help you determine your take profit, it can also help you determine your entry points. All right. So now there are rules on support and resistance that you should know. All right. First is that one of the major rules is that when a support is broken, a new resistance is what? Formed. What do I mean? That means that particular zone where market used to bounce up when it's going down, if she got broken, if the market comes back, it will now serve as what? A resistance. Let me show you an example here. Let's say the market come down like this, goes back, come back like this and break. Now know that this zone that was the previous support has become what? The resistance. And why? When the market start going up, it will have to reject there, serving as what? The resistance. Do you understand this rule? Do you understand this rule?
Please re-explain, sir.
All right. I said for when a support is broken, a new resistance is what? Formed. Or the broken support will become what? A resistance. Which shall just illustrate. This was the market just going down, bounce off here. That point of rejection is called what? The support. Now it's come back again, maybe, and the support is what? Broken. Now, one thing says that the rule applies that that broken support is going to serve as what? A resistance. So you expect that when the market comes back to that broken support, you expect it to reject the market and serve as what? A resistance. Which I'm just trying to say here. The market now goes back again, which here reject, and now what? Bounce off again. Though most times it can also what? Break, depending on fundamentals and momentum of the market. But this is just how the market psychology should be. When the support is broken, a new resistance is what? Formed. Let me just try and give you illustration with charts so that I think you understand better with that. All right. Sorry. All right. Let me just find an example and show you. Now, let me On my trend line, I'm going to use the horizontal trend line to connect supports. All right. Now, this is what I mean by a support. If you look at when the market gets to these levels, when the market gets to this level, it bounces off, creating what is support. It gets back there again, it bounces off, creating what is support. Now the rule is saying that when this support is broken, you expect it to serve as what? A resistance. Let's see how.
Okay.
That's the rule. But most times, because of the momentum of the market, it can also what? Break it. And if you look at the year that it got broken, you can see that the market, this was a very flash move. That was why it was. It broke broke that
Support.
resistance again.
Yeah.
Do you understand that? But let me
Yes.
just find a one that respected this very, very well. So you guys will understand it better. All right, I think I found one already. Um, now look at this. Look at this. If you look at when the market was here, it bounced off, touches again, bounce off, touch it again, bounce off, because it was a support. Now at this particular point, it touches again, it bounced off, but finally what? Broke out its page. Do you understand? Because of the momentum of the market. Now you can see what the market did. When it started trying to come back again, it reached that level. That level now serves as what? A resistance. This is what we mean by when the support is broken, a new resistance is what? Formed. You can see that it rejected it and continue what? Falling. You can see when you try to come close to it again, it rejected it. At this point again, it rejected it first. Then before you know it, you tried to break, but couldn't break fully. You still come back, because it's actually what? A resistance. A new resistance has been what? Formed. So it's a very simple rule. When a support is broken, you should be looking at it that a new resistance is what? Formed. So whenever the market is getting flipped to that place, watch out for the reaction of the market. Do you understand?
Yes, sir.
All right. So let's talk about the resistance. Now, a resistance is when the market at that particular point, the market rejects when going up. So when the market is going up and make a reaction and rejected as far coming down, that particular point is what? Your resistance. And comes to the rule, when the resistance is broken, a new support is what? Formed. So it's just kind of vice versa of two.
Vice versa.
Let me show you an example.
So
Let me
please, can
find
you
an
take it
example.
again?
Okay, I said when a resistance is broken, a new support is what? Is formed. You understand? That means when when that region and the market needs to bounce up while going up got broken, it should start having as what? A support. Whereby if the market come back to it, you should reject it and continue pushing it what? Upward. This is what I mean. This is what I mean. When the market, let's say the market was coming up, it reject. Coming up, it reject. Then it's now broke the resistance. Now, what I mean is that whenever the market is coming down again, you're expecting it to serve as a new support. You're expecting the market to reject at a particular level and bounce up. Come on, who is bringing? So you expect that whenever the market comes back to that zone that was broken, you expect it to what? Serve as a new what? Support. So it just kind of vice versa of when a support is broken, a new resistance is formed. And when the resistance is broken, a new support is what? Formed. So most times the support that is formed or the new resistance that is formed might not be very, very strong. So what you should watch out for is the reaction of the market when it gets there. Do you understand? And knowing fully well that that's not just the only thing that helps you analyze the market. There are still other factors, other technical factors that you should also check to get your confirmations, which will actually get there. Do you now understand support and resistance?
Yes, sir.
All right. Any question on support and resistance? Anybody with a question on support and resistance? All right. Since there's no question, now we're going to move to connecting trend lines. All right. Who has a question?
Please, like I really wanted to ask that when drawing your support or your resistance,
Okay.
how do you really have to come out with it? Because from here I see I don't really understand how you come out with the support and resistance respectively with how the previous market is.
The thing is that every support that you see, has been a support in the previous market. For example, maybe you see a support at the level of let's say BTC, see a support at 23,000. If you scroll back, maybe 2 years or a year or 2 years ago, you will find out that particular price, that particular place has actually served as a support in the future too. That's why whenever you see I draw a line, like if I should carry this line now to this place, sorry, I need to. If I should carry this line to any support that I want, let's say I want to add it to this support here. If you follow this line now and go back, you will find out that in the previous market, it has actually served as a support somewhere. For example, look at this. It served as a support here. Go back again. Let's be going back. It served as a support here. Do you understand? Now, it actually served as a resistance because it's actually when it was broken. But we are looking at the ones that are on top, which are actually what the support. It serves as a support here. So if you keep going back to, you find out that that particular line has been serving as a support previously. Do you understand? So every support that is sort of formed in the future has actually come somewhere in the past. Do you understand? So that's why we try to, let's say you want to determine a future support, you have to connect your current support or the previous support to determine what the future support. The same thing applies with what resistance. If I want to draw my support here, I just need to look at the ones that actually look close to themselves. Like for example, I'll just look at the major reactions. Like look at the this particular place now is a resistance. If you make the rejection here, these are rejections. You also see it here again. You also see what happened here again. You get there again, it rejects. So here, particularly right now, is also what? A resistance. So you can have thousands of resistance in a chart. Do you understand? But you should be looking at the ones that are more closer to you. The ones that respected itself more often in the nearer what chart. You not just scroll back and be looking at a support that is far back. I'm trying to use it to analyze your future what support. So what you do is just look at the ones that are close to you. Like there was someone that sent the analysis in our premium signal group. You also connect something like this. You determine that any range from here to here. Let me draw a range. Let me connect a range. So you also learn how to use a range. So I talked about it yesterday. All right. Let me draw a price range. It determined that whenever BTC get to any price within this range, he expected what? A comeback, like a rejection for the market to resist and start what? Coming down. That was the person's prediction. And he does that by what? Connecting the most respected what? Resistance. So I will not just come and take my line and be connecting with ones that did not respect themselves. Yes, and I have to look for the ones that I respect. Like as I'm moving this person now, I will be looking at the ones that match themselves very well. I can keep my support here. Why? You can see how it's rejected here. Let me bring my pen. You can see how it's rejected here first, rejected here again, rejected here again, and rejected here again. So these are well respected with support. That's yes.
Why say that you guy?
You ask me a question.
No, sir.
Well, these are what well respected what support, and they are the ones that determines the future of the market for you. All right. Like if I'm supposed to short this trade because of only just a resistance, I should be looking like my TP, my final TP here. I need a clear what line. And for my TP1, TP2, TP3, I'll be looking at supports that are more closer. Where market makes rejections that are more closer. Like you look at here now, that's what is support. I can call my TP1 J. Then here again, I'll call it my TP2. Are you understand what I'm trying to teach here?
Yes.
Yes, sir.
Yes, we get it,
So
coach.
all right. This is what I'm trying to explain by you use support and resistance to determine your what, your entry, your stop loss, and your what, your exits. Do you understand? Now, let's say if I want to put my exit, let's my stop loss on this trade, I'll be looking at above those what resistance. Because anything above that resistance means what that resistance has been what broken. So I'll use it as what my stop loss. Because I'm trying to short this trade based on what resistance. So when the resistance is broken, like I said, to serve as what a new word support. So that makes that trade what invalid. So what will I do? I will set my stop loss anything above what those what resistance. So I can set my stop loss anything above here. Are you getting that?
Yes, we are with you.
All right. So I will try to what set my stop loss above anything that above what resistance, because anything above that resistance has shown that the resistance is what broken, and that particular trade is what invalid. Instead of you like holding the trade, being like it will still fall, it will still fall. It is just the best time for it to what exist and what look for another what opportunity. There will still be opportunity for you in the market, so you must learn how to accept the minimal what loss. Remember, that's still part of your what risk management. So this is an example of what resistance. At the same time, you can see that what is also an example of what is support. Like someone can decide, okay, since the market says here reject and here reject, you now decide, like, I'm going to buy here and sell at the what resistance. So this is just form of trying to trade with just what support and resistance, which is not just advisable. You must apply more other factors. If both of them or all those factors are saying the same thing, that's give you more valid what trade. Using one factor will not really help. It can be helping you 50% or 40%. If you add more factors, it increases your chances of what good analysis. Do you understand?
Please take it again. You are going to buy well, where, and sell where?
You buy at support and you sell at what resistance. Simple. Do you understand that?
Yeah.
You only buy at the support, because that's where the market will what reject and start going up, and you sell at the resistance, because that's why the market will reject and start what going down. You can't buy at a resistance, because what the market is expected to do is to reject and start what going down. So what you have to do is what only look for buy opportunity as a support and sell opportunity as resistance. Not all support, not all resistance, but that's where your opportunity should be picked at. So you should be looking at those words, support and what resistance. Now there are other support and resistance is not just only what a horizontal line, connecting horizontal line and that. There is support and resistance that you use trend line to what connect, which is the next topic we are actually moving into. Connecting of what trend lines. But I hope you guys will understand about this particular one, support and resistance.
Okay.
Sorry, sir.
Okay, I'm with you.
Yeah. For someone that intends to buy and hold for over a year or two, is that person supposed to use that person can use a 1 hour chart or 2 days chart or 3 days chart? One has to use a
If you
different chart
want
to.
to, let me tell you something about keep when it comes to financial sector, all right. Most thing work, everything or almost everything work with trend. Do you understand? Now, trend is not constant. Bear this in mind. Trend is not constant. All right. A trend can change in a minute, in an hour, in a day, in a week, in a month, in a year, and in years. So trend is not constant. And for you to determine how long you hold the project, the most factor you should consider is the fundamental analysis. What does this involve? I know it has been taught, but what does it involve? This involves the team, the project, how well are they doing? How much investors are they attracting? How is their evolution? Do you understand? How is their ecosystem? How are they building? How constantly? And even if you determine, okay, you're going to do this come for a year, you should always keep up with the fundamental, because a single use can just destroy a project. A single fundamental use can just destroy a project. So basically, I would say technical analysis is much likely for what scalpers and day traders. Do you understand? Whereby you are trying to short for a short period of time. You're trying to trade for a short period of time. But when it comes to a long period of time, the main key is what? The fundamental.
Okay.
Are you getting what I'm trying to say?
Yes, sir. Thank you.
That can be saying, okay, you're going to buy. Remember why you see a support just broken? Because there is something that has happened in the team that would make that support to break. Do you understand? But when it comes to technical analysis, you're just trying to scare, you're trying to get a sniper entry, take a quick profit and leave the market. But when it comes to fundamentals, this is where you can determine whether your coin can do ×2, ×3, ×10. It's fundamentals that does that, not technical analysis. All right. For example, now a coin will just come and announce that they are doing token burning. That's a very great fundamental. And what will you see? You see the coin will start moving up in price. Because that fundamental is great. Coin buying is like using real money to buy back coins in the market, then dump it. Like not dump it, like seal it off in a wallet that you cannot sell it. So making that coin to have that steady, let's say steady value in it. For example, a coin that actually worth 100,000. Do you understand? That actually worth 100,000. Now they now buy 10,000 worth of that coin. They invested 10,000 in that coin. What would that coin worth? 10,000, 110,000. Now, token bond is like that 10,000 that they bought, they went and sent it to a dead wallet where you cannot sell it. So which means even if everybody should sell off their token, it will still remain that it will still have that 10% value. So even if everybody should sell off their token, all the token, it will still have a 10% a $10,000 value. Are you trying to understand what I'm trying to say? Hello?
Hello.
Yeah, we're with you, coach.
All right.
With you.
Yes, sir. We are following you, sir.
So the best way to determine how many days a coin, how many years you can hold a coin is what's fundamental. Well, for day trading, both fundamental and what your technical analysis, you use a charting to determine your entry because you're trying to minimize what the drawdown you can see. You know, most people cannot even bear to see little drawdowns. Most people want whenever they place a trade, they start seeing profit. All right. So you can only determine that through what technical analysis by sniper what entry. All
Okay,
right. So,
sir.
All right, sir.
Hello.
Sir?
Yes, sir. I wanted to ask, like, when you
No
want.
question. All right. The next thing we have is trend lines. All right. How do you connect a trend line to create a support and resistance? How do you draw a trend line? Now, the major rule to draw a trend line or connect a trend line. Are you asking a question?
Yes, sir, please. I want to ask a question. I
Go
wanted,
on.
like, if you want to come out with your support and resistance, which candle is it preferable to use a 2 hours candle or 1 hour candle or 30-minute candle?
If you're a day trader, all right, you should be using 4 hours and 1 hour. You should be using 4 hours and 1 hour to analyze and find your entry. You can also use lower time frames to also find your entry. But for analysis, you should use 4 hours and 1 hour to analyze. Then for scalper, you should be using 1 hour.
Please let us
Please mute your mic.
I don't know. You know that your program is noisy or have a noise. You still have your mic open. It's really disturbing. Most times I will even forget what I want to say whenever I hear this noise or get interrupted. Continue with your question. Any other person with your question?
Yeah, you said 4 hours or 1 hour. It's not really get you where the noise was too much.
So I say for a day trader, all right, 4 hours for analysis, 1 hour for analysis and entry. Do you understand? Now for scalper, you use 1 hour for analysis, 30 minutes for analysis, and 15 minutes for entry. 15 minutes and 5 minutes for what? Entry. So it depends on the type of trader you are. So you have, and to find the type of trader you are, you have to explore both and know which one will be favorable to you. Because most about trading is about the psychology. So once you find the field or the path that you feel more comfortable, secure, and profitable, going with that. Do you understand? So everybody must not be a day trader, and everybody must not be a scalper. All right.
Okay.
So any other question? Okay, no question. So now, as we are talking about trend line, how do you connect a trend line? Now, this is the major rule of connecting a trend line. Before you connect a trend line, there must be 2 lows or what? 2 highs. There must be what? 2 lows or 2 highs. And when we talk about lows and highs, what are they? Let me show you. Those rejection at the top are the highs, and those rejection at the bottom as under are the lows. For example, these are highs. Look at the red mark. All these rejection at the top are what? The highs. All these rejection at the top. Why these rejections under, which are this. All these ones under are what? Lows. So before you can connect a trend line, there must be at least 2 to connect to. All right. And that's the only way you can what? Connect a trend line. You can't just connect a trend line on only 1 lows or high. So if you are trying to connect a support trend line, there must be what? At least 2 lows. If you're trying to connect a resistance trend line, there must be at least what? 2 highs. Do you understand?
Yep.
Yeah.
All right. So now we are going to start by trying to give an exemplary connection by connecting two lows or two highs to use it to determine a future resistance or a future what? Support. Let's get here. Now, which one should we connect? Let's try to use which one will I connect? Let me just connect here. I've connected the first high. This is the second high. I would now draw my line straight. So let's say we are just in this particular chart. Let's say these things. Let's say these things, these ones, all these things that happen here have not happened. So I just connect. The chart was just, let's say, from here. Do you understand? That was the current chart that we have. So now I now connect what is a resistance trend line by connecting to what highs. So I'm trying to use this to what determine a possible future what resistance. And what do you see happen? You can see as the market gets here, what do you see happen? It resisted the market. Even though finally it later was broke out, but that shows you how it tried to what respect it as a what a resistance. Trying to show you that connecting trend lines helps you to what create resistance and what support. So, but this one is a resistance. If you also look at here too, you can see what happened here. The market also resists what at that particular what zone. I'm talking about here. You see, as the market touched that trend line, you can see a reaction. It bounced back immediately, showing that that was what a resistance. So connecting trend lines is another form of what resistance or what support. And to do that, you must have two lows or what two highs. If like some people that will just go and be connecting with just one lows and one highs, let me just show you what it looks like, because it's not going to give you any single result. This is what it looked like. Let's say I went and connected to this high here. Now, where would I connect it to? No place. You cannot even determine where the market will move. Because you can keep it this thing here, you can keep it here, you can keep it here. So you can't know where the market should what serve as resistance. But connecting to, let's say I connected this and this. You see that? I can now say, okay, anything close to this trend line can be my what resistance in the future. So me having this right here, I can say, okay, anytime that the market gets to this trend line, I will close my market, because it will be serving as what my resistance. Are you getting there?
Yeah, we're getting it, coach.
All right. So the same thing applies to drawing a support. Let's look for an example. Let's look for an example. A lot of examples, just looking for the one to connect. Let me say I'm connecting this and this. This for the future. So I'm connecting this and this. Now you can see that for me to connect this, I have what a low here and also what a low here. So probably I'm determining that anytime the market touch this trend line, I'm expecting it to serve as what a support. So let's say I'm shorting this market. I can use this support trend line to determine my what my take profit. Like I said, whenever you touch this trend line, I will close my market. Or I can even say whenever you touch the flat trend line, this one, I will also what close my what market. So based on the reaction that I saw there, or candlestick what confirmations, a lot of factors determine. So you need to just draw your trend lines, connect a lot of trend lines, determine where the market should reject. So if the market is rejecting, you will know why it was rejecting. Not you happen to saw profit on the trade, and because you didn't know that the market is reversing, you end up losing back those profits in the market. So this is just the simplest way to what? Connect a trend line. So I can connect as many trend lines that I want. So you should make it neat, not just drawing a whole lines in a small chart. So you should make it neat. Like I can just see, I'm just trying to draw as much simple as I can without trying to connect everything. So I just look at the ones that look more beautiful to me and I connect. I can also decide to connect this particular one to this. Yes. I also decide to connect it there and say, okay, whenever the market touches this line, I'm expecting what? A rejection. Is that okay?
Yeah, it's
Yes.
clear, coach.
Yes, sir. Very understood.
All right. So now we are done with trend line. We are now moving to what we call price action forest. Now, sorry. The book that I'm using just was going to tell you forest. Price action. Do you understand? Now, this price action are patterns. They are kind of designs, beautiful designs that you can find in this chart, which you can only get them or identify them by what? Connecting trend lines. Now, this is where you can learn how to perfect your trend line. You said, okay, you are looking for this pattern. Now, which support and resistance should I connect that will show me what? That pattern. What to teach you. When it comes to price action, there are a lot of patterns. Let me start making the list. We have the symmetrical pattern, the bullish and bearish symmetrical pattern. We have the wedge pattern. We have the double top. We have the double bottom. We have the head and shoulder pattern. We have the inverted head and shoulder pattern. We have the bull flag. We have the bear flag. A lot of patterns, and you must have those things upstairs. Like even if you're not going to have it upstairs, you must have a book where you draw this, illustrate them, and use it to what? Find them on your chart. Know what your chart is forming. And each of these patterns will tell you where the market is what end up what going. For example, a blue flag will tell you that the market was going to buy. So whenever you identify a blue flag, it means that you should be looking for what? Buy opportunity. So these are what price action are going to teach you, and that is the next wave we are moving. So tonight we have covered the support and resistance on a normal horizontal line. Then we have also covered the support and resistance which is what? Trend line. So now this is where you're going to check our book, the book that I sent you guys yesterday, and I hope you guys open it and look into it. And I specified that the topic is looking at the book is support and resistance, price action. They can now look into candlestick. All right, let's get to work.
Who's that? Come on.
All right. If you also read those books, that book that I sent, like you can see here, it will also help you understand very, very well. Why I love that book a lot is it's not just writing, it has a lot of illustration. And if you look at this drawing here, you understand about the support and resistance. Like I told you, there are always a lot of support and resistance. So you just need to look at the ones that majorly what respect itself. Just like you can see here, all this mark and the mark for you on this piece. So you have the book already. So I think when you read it yourself, it will also help. Well, for now, we are moving to price action because we are done with support and resistance. Okay. All right. Chart patterns, which are price action patterns. Here are the list of chart patterns we are going to cover tonight. Not tonight, actually, but on this particular topic. It's going to be long. It's not a quick class, and we're going to take it one after the other. So we have the triangle patterns. And inside that triangle patterns, we have the symmetrical triangle, which is bullish and bearish. So we also have the flag patterns, we have the pop and handle patterns, we have the wedge patterns, pullback patterns, double bottom and double top chart pattern, we have the triple bottom and double top chart pattern, we have the head and shoulder pattern, inverted head and shoulder pattern, pendant pattern, and channels. So first, we are starting with triangle patterns. Now, triangle patterns are believed to be the most essential and frequently emerged chart patterns in terms as the holy grail of day trading because of their reliability and effectiveness. So triangle patterns, they say, is the holy grail of day trading, which means you can easily find them as a day trader. Do you understand? Like if you're a day trader, these are the most frequently chart patterns that you can find, the triangle patterns. So, and it can be that the symmetrical triangle patterns or the ascending and descending triangle patterns. So all in all, we know that triangle patterns are easily formed in our charts. So when you want to identify a triangle pattern, it's much easier because they are rampant than other patterns that are much rare. Do you understand? So that's what they mean that is the holy grail of day trading. All right. So first, we are going to talk about the symmetrical triangle, bullish one. So the symmetrical triangle is of two types. We have the bullish symmetrical triangle and we have the bearish symmetrical triangle. Now they say a symmetrical triangle breakout pattern is identified by the distinct shape created by two converging trend lines, symmetrical in nature. The pattern is formed by two trend lines that connect a series of sequentially higher swing pivot lows. This one is talking about what? Lows. And a series of sequentially lower swing pivot highs. So this is just talking about what? The highs. Price action is largely contained within the triangle formation, and traders typically look for buying opportunity once the price break out above the upper trend line of the triangle. So this is very simple. I'll use drawing to say that, to illustrate that. Let's get to now. What they mean by two converging trend lines, symmetrical in nature, is trend line that is downward sloping and upward sloping converging towards each other. Let me show you. This is what they mean. Now they said a bullish symmetrical triangle is when let's read it again. Sorry.
Who is sleeping there?
This guy. Somebody is
Who they breathe?
Did I just hear snoring?
This guy paid to come and sleep here.
Oh boy, yeah. Oh boy, this morning now
I just want to
heavyweight,
be
yo.
present.
Crypto not is smoking. He forgot and left his mic on.
Oh boy, this nose la trailer hard.
All right, guys, let's get it going. Time is running out of us. All right. So a symmetrical triangle breakout pattern is identified by a distinct shape created by two converging trend lines. Like I just said, this is what they mean by two converging trend lines. All right. So they said the pattern is formed by two trend lines. Wait. This shape created by two converging trend lines, symmetrical in what? In nature. The pattern is formed by two trend lines that connect the series of sequentially swing pivot lows and the series of sequentially swing pivot highs. What does that mean? It connects at least two lows and two what? Highs. Look at this. Two lows, two highs, sorry, and two what? Lows. All right. So price action is largely contained, which is price is contained within that what? Triangle. The market will keep getting tighter, tighter, tighter until what? A breakout is occurred. Now they say that a breakout is expected on what? On the resistance. And once that breakout is gotten, the market is expected to what? Move up. So on a bullish symmetrical triangle, traders tends to look for a buying opportunity, which means when you identify a bullish symmetrical triangle, you are not expected to sell. You're expected to what? Look for buy opportunity by looking for an entry within the triangle or afterwards the breakout. Let's come again. Put it another way. When price action form a series of sequentially swing/pivot highs and higher swing/pivot lows, a symmetrical triangle is created. Symmetrical triangle can break out in either direction since this consolidation pattern has equal sentiment driving the information. So this is just, they are trying to talk about symmetrical triangle itself, including the bullish and the bearish. Now, there are factors that I'm going to state that we use to identify which one is the bullish and which one is what? The bearish. All right. So they have the same distinct shape, but there are factors that you use to determine whether the one that is forming is what? The bullish or what? The bearish. So here, particularly, is talking about just the symmetrical triangle. So they say that symmetrical triangle can break out in either direction since this consolidation pattern has equal sentiment driving the information within an uptrend. The possibility of a breakout to the upside can increase due to the overall momentum of bullish sentiment supported by the potentially significant amount of underlying support in the chart. So what it means that you can determine well that is going to break at the top based on a significant amount of support created. For example, what I mean is that when there is more support created, you can determine that the breakout should happen at the top. Now, but for me, the major way that you determine which one is the bullish is when the trend is actually a bullish trend. For example, the market was actually going up before this formation started to form. So which means it's a continuation pattern, and we expect it to break out, retest and continue. This is the best way to determine a bullish symmetrical triangle. You determine that based on trend. When the trend is a bullish trend, now since symmetrical triangle are continuation patterns, boom, you expect it to break out at the top and continue the bullish trend. When the trend is actually bearish, you expect it to break out at the bottom, breaking the support and continue the bearish trend. Is that clear?
Yes, sir. Yes, sir. Yes, sir.
I know that's the question. Can go on.
Yeah, sir. So that happens. It happens like when the market is going up, when it breaks and start going up back, it will be the bullish one. What if eventually it breaks it and start coming back down when the market was not actually in a descending angle?
It's an invalid pattern. Patterns are not 100%, most patterns here has 70% success rate, 80%, even 85% success rate. So there are the factors about surrounding this has not finished. I'm still coming. All right. I'm just trying to know whether you guys have understood what I just said last. There are some still factors that we also use to confirm your trade. Do you understand? But let's just
Okay.
continue. They said as with any pattern, symmetrical triangle breakouts are carefully assessed by technical analysts because of their ability to produce subsequent upside and downside price action. Analysts will use other charting tools to place odds in their favor of the upside price movement. What does that mean? They will use other charting tools to create odds in their favor. That's why I say you don't analyze with just one factor or technical factor. You use other factors to place more odds in your side. Let's say you have used support and resistance and it's saying it's buy. You now use five patterns and you say it's buy. You now add let's say indicators and it says buy. You now add a candlestick and it says buy. What does that mean? The odd is strongly in your favor. So the more different factors are saying the same thing, the more the odd is in your favor. It's just like someone that wants to place a bet. Before you place a bet, you have to analyze. Let's say if you want to say that this team will win, you have to analyze first. You will be like, does this team usually need to win in their previous time? What's their formation? Do they remove any of their good players? When you're adding more of those factors of analyzing sports betting, you are breaking those odds more to your favor. Do you understand that? Yes, you want to determine that the people that used to play, you want to determine that this particular game is going to be an over 2.5. There are several factors that you use to determine if it's going to have an over 2.5 of goals. And some of those factors include their previous goal scoring. You don't usually score more than 2.5 in their previous meetings. Uh, what was the determination of the both teams? Like, if is the team determined to win, or are they determined to end up in draw? A lot of these factors. So the more factors you are bringing to analysis, the more you are bringing those onto your favor. So just because they said a mathematical triangle simply means that you must buy. Doesn't mean you just jump in and buy. It can still be what? Invalidated. Do you understand?
Yeah, that's clear. You laid it all right, coach.
All right. So it can still be what? Invalidated. So, but once, let's say you not add candlestick to it, then you not see a bullish candlestick saying, okay, bullish candlestick simply means buy too in the market. Now, if the candlestick is saying buy and the chart pattern is saying buy, what will you do? It's bringing more out to your favor. And you add maybe you not add fundamental. Fundamental is very, very, very well bullish. What are you waiting for? You buy immediately. Do you understand that? So, but using one factor alone is not going to give you the success rate you need, or can even be giving you some wrong information. Because let's say you are using just support and resistance and you're saying buy, but other factors are saying sell. The all is not in your favor. Do you understand? All right. So look at an example that they gave us here. You can see that there was what? Two highs. It looks similar in my drawing too. I'm still here to talk about how to take profit or how to enter these patterns. How to set a stop loss. We still talk about that too. So a lot of things have to be learned. This is one of the longest topic. All right. So now if you look at this, you will see we have two lows, two highs here, three highs. So we also have lows here, and lows here. Now, if you look at the direction of this first high, you see that the market was on what? On an uptrend. Before this high, this rejection was made. You see why a bullish symmetrical triangle should come with what? A trend. You should determine it based on what was the actual trend of the market before the pattern start forming. So first, this just come here, come here, come here, and I now draw my trend line. Now, when I draw my trend line, you see now, whenever you touch the trend line, bounce again, come here, bounce again. And what will I see? A breakout. This is what determine what? A buy. Now, but you can ask yourself, how can you get entry into this kind of trade? Like, how can you enter the trade? When should you buy? Since you have seen this pattern from me, when is good for you to buy? Now, this two comes back with the rule that I said before. That you can only buy at what? A support and not at what? A resistance. The rules comes back to here. That means after these two lows has been formed, which you use to create your what? Support, you can make your entry whenever the market touch at that line again. Do you understand that? Because that is where there is a very high possibility for the market to what? Bounce back and get you into profit. If you went and buy here, let's say you buy here, you can see what happened. The market, market is expected to what? Be going down. You end up being what? In loss. And out of curiosity, you can close your trade on loss, or you can even what? Hit your stop loss. Do you understand that?
Yeah, it's clear, coach.
Yes.
All right. So another way to get entries is what? Wait for breakout and then test. Let's say the market has broken out, we test. We're testing that breaking was resistant, and it now serve as a support. Same rule apply. You only buy at what? A support. So when the resistance is broken, a new support is what? Formed. So all these rules, this is why I'm telling you guys these rules. You can be writing it down so it will help you. Because those rules apply in everything. When the resistance is broken, the new support is formed. You can only buy at what? A support. And you can only sell at what? Resistance. So whenever you're making your entries, your exits, and all of that, all these rules are what? Applied. So now, like I said, the second way to enter the trade is when this resistance is broken on the retest, which will actually serve as what? A support. So this is where you can make your what? Entry. So if you decide, okay, you don't want to enter here, you want to be sure that there was a breakout. You want to be sure there was a breakout. Then you wait for a breakout, wait for the retest, and make your what? Entry. I hope that was fully understood now.
Yeah, it's really soaking in. Thank you.
All right. So I believe you guys have understood a bullish symmetrical triangle and how to make your entry. Now, what about stop loss? Let's just check about stop loss. Now, there is no specific way to set a stop loss. All right. But for me, to set a stop loss, you should set it at anywhere away from what? The support. For example, I can say, okay, since if I'm entering the trade here at the retest, my stop loss should be here. You understand? If I'm entering the trade here, my stop loss can be what? Here. Is that clear?
Yes.
So this is all we have for bullish symmetrical triangle. Let's get to our chart and look for an example. Why you actually want to get a live example. Like it also give us a live example here. What do you see? The market was on an uptrend. Boom, retest. Continue. All right. So someone can make an entry here. Or make an entry on a retest. Very simple. But let's get to our real life chart and look for a real life example. Let's look for a bullish symmetrical triangle. I only found one without wasting time. I think I've already found one here. That's why they say it's the holy grail of day what trading. It can easily be found, like it can easily form. Hold on, I'm coming. Hold on, guys, I'm coming. All right. So for the British symmetrical triangle, this is an example here. Very easy to find. Very easy to find. No. I can't call it a British symmetrical triangle because the breakout was at the top, but the trend looked like it was what a downtrend. Hold on. I don't know. This man trading view is having an issue. Figuring out how the charts are supposed to be. See, what's making me confusing? That's it here. Let's see, the trading view was just messing up with my mind. All right, I think I got one here already. First, a series of highs and lows connecting converging to each other. Now, what do you see here? Hope you can see my screen.
Yes, we can see it.
We can see our screen.
We are seeing
right.
it.
Yes, we can see it, those.
Me, I cannot see it though.
All right. So look at this. This is an example, a very clear and pure example of what? Bullish symmetrical triangle. And we found this on what? Rose USDT. What do you see? The market was in an uptrend before it started what? Creating these highs. And as I said, this one was created, it's touched again, come down again. I just say, okay, let me connect this trend line. I connect trend line to these lows and this low, and this side, and this side. Now, what do you see? When the market came to this support again, it rejected it. Came again, rejected it. Like I said, for you to make an entry, you can make an entry at the support or after the breakout and retest. Now, what do you see? The market break out the resistance and it retest what? Occur, which you cannot make your entry here. Do you guys see the live example here? Can you now determine that? Yes, this is how it works.
Very clear.
All right. So let's talk about take profit. How do you determine your take profit? All right, you can determine your take profit by measuring the flag pull, the distance of what? The flag pull. And what does that mean by flag pull? Let me get this thing clear. Flag pull is the movement that happened last, the distance of the movement that happened last before what? The information of the what? Pattern. That is, let's say from here, you mark it here. So how do you measure the movement? You have to use your trend line. Use a trend line, mark it from where the pump started, and mark it to where the formation starts. Then you now have to clone it, like make it double so you can move it. Oh my God, I'm trying to move this thing. You move it from the breakout. Determine your what? Your TP. So any region, anything around the zone of the end of that trend line that you just marked is your what? Your TP. Even though I've not even dropped it very well.
Wow, love it small thing.
Coach, could you
Now
repeat
you
it
can
again?
see. Now whenever
I
the
don't
market
understand.
kept close again. Should I do it again?
Yes, please.
Okay, let me do it again. You draw a trend line, marking from where the pump starts. You can start from here and where the formation started. You mark it like this. Boom. Now, in order to move it, you can just carry it like this and move, or you can clone it, like click the three dots I have here and clone it. But let me just not bother cloning it. I'll just drag it and put it from the retest. Easy fun to drag this thing. Not easier. My big hands. What do you see? Anything close to the end of that line was what? A rejection. I can see what the market is currently doing. It's trying to what? Come back. It has rejected for hours. Yeah. And it's trying to what? Come down. So this is a typical clear example of a what? Symmetrical what? Triangle. You can save this picture on Rose. This is your Rose USDT 2 hours time frame, and that's the current recent last pattern. All right. I hope you guys understood now. Medical bullish triangle. Any question? Any question? Any question? Because we're rounding up, that's an hour. We're rounding
Yeah,
up very soon. Any question?
I have a question, sir.
Go on.
Yeah, so with this now, you said the take profit will be the where there's rejection like that. So that will be the final take profit, or that will be the first one.
Now, look, that should be your final take profit. Like, there are still other factors. Like, I need to determine your take profit. Like, when I talk about the support and resistance, now I can decide, okay, my TP1, let me use a trend line. My TP1, I can mark it here.
Okay.
Why? Because of this, because there was a resistance there.
Yes, sir.
And it can create a resistance that you
Say put
look
no
at
water
this
for me, let me make pepper.
Mommy, please. I haven't think I haven't I didn't know that you're putting someone close to you. All right. So you can see a resistance that was there. All right. So I can call that my TP1. Then I will now look for another resistance too. I will look for another resistance too. To mark as my TP2. Because most times it's not a must that is going to reach there, it's not a compulsory that's going to reach the final profit. So I have to use the support and resistance to determine my what final my take profit one, take profit two, or how many take profit I want to have. All right. So I can move to here again. You can see because there was a rejection here. There was a rejection here and here. So I can say, okay, let me call that my TP2. Now, if you look closely, let me zoom it. If you look closely, you can see that when the market gets close to that place, there was a rejection that will even change the direction of the market. But because of the momentum is very strong, that was why it was able to what? Break it. So doing those measurements is not like 100% that is going to reach there, but you should determine your final take profit. Anywhere close there can totally change the direction of the market. Just as you can see what is currently happening. When it goes to when you get to there, it's totally changing what the market trend. You can see a lot of fluctuation that happened around there. And within here, a new pattern is forming. From what I'm seeing, it's actually a bullish pattern. Actually, let me try to do it. The pattern and see. The pattern that I'm seeing here is literally called a bullish, a bull flag. But let me try to confirm. Yeah, I think, yeah, that's what it's forming. A bull flag. Now you can see I've actually connected the trend line here. I'm expecting whenever the trend line is touched, there should be what? A reaction. What I'm expecting to happen here, let me try to predict the future here. Let me try to predict the future of this market and see how it goes. What I'm expecting the market to do is so there is first low, first high, second low, second high. What I'm expecting from here, so this market to do like this, and break out. So after breakout, a retest, and what a movement like this. Just by looking at this is the only thing I'm expecting the market to do. So I've not added other factors yet, but just with price action pattern alone, this is what I'm looking at and I'll be waiting for. Then when I now add other factors, I will now want to get all in my favor. All right. So just another pattern. It's not a symmetrical pattern. It's called a blue flag pattern, and you stick there. But I'm just trying to show you how These patterns are helpful. When you look at the chart, you can easily just, once you know all the patterns, you can easily see them in a chart. And you can see I easily identify it without even having to struggle. Once I look at the chart, I see, oh, that's a book flag there. If I see a medical pattern forming, once I just look at the chart, I will see it and I will know because I have those things upstairs. Like I've memorized them before. And how did I memorize them? When I was learning projection patterns, I used to draw them in the book. Like if I get a book, I will draw those patterns and I'll write a short description. That is the information that I need to know about the pattern. And I keep mastering them. I will check my book and I will go into the charts. Any current chart, I'll be trying to look for if there is any pattern in my drawing book that is actually what forming. And at the end, I will see the current pattern that is currently what forming. So this is how I consistently do this until my brain was able to what store it in a long-term memory that I find it very easy to identify, no struggle, no stress. All right. So this is where we are going to draw conclusion for the class tonight. If you have a question, this is the time to ask the final question.
Okay, my question is, please, what does closing of market mean? Just I don't understand that. What does it mean? And how many times do we take profit? Can we take profits just once or twice or 3 times or more?
If you attended the finance future illustration, that was something that talk about partially taking profit. Now, the only reason you're partially taking profit is that you want to have some profit at hand in case anything should happen in the market. Now, how many take profit or partial take profits you have? It's your sole responsibility to determine that. You can divide, okay, your take profit into 4 sections. Some people can say you can only take profit once. Some people can say you can only take profit twice. All right. So you determine that based on what is favoring your odds. All right. Like for me, I used to have 3 take profit. I used to have my take profit 1, which is used to be very small. Like when the market has small movement, I will take that take profit 1. All right. So the second profit can be double or triple of my first take profit, then my final take profit. And I submit that also based on the support and resistance that are available. So a lot of factors determine that too. All right. So it's when you start trading, you determine what's best for you. But it's always good to have up to at least 2 take profits. Don't have just 1, just have at least 2. So you take the partial one, you can now wait for your final take profit. Understood?
Well understood.
Another question?
And yes, I asked the first question I asked about what does this close of market mean? I don't know.
You mean closing of market as in the general market or closing of your own position?
That was when you were talking about trend lines and all that. You mentioned closing of markets. I didn't get what that means.
Closing of market. Well, I'm here to understand the particular one you're saying. If you're talking about closing of a position, it's closing of a position. But like what we call when a new daily time frame is formed. Do you understand? A new daily time frame is formed. That is at that particular second that the new daily time frame is formed is trying to open, market close and reopen. Do you understand? Because it's a new day. That's why if you're watching, if you used to be online in the chat in the midnight, market new candle used to form at 1 o'clock. So 5 minutes or 10 minutes or 2 minutes before a new daily candle time frame, you can see that there used to be a very volatile movement. A very volatile movement. Now, if you come to Forex on is different. Forex on is that the market stops. Like when it comes to closing time, the market stops entirely, no movement at all till it reopen. Do you understand? But it doesn't really happen that way in the blockchain or in the crypto. Market trade 24 hours. But it's just that during when the daily time frame, you don't get time frame informed, there used to be a volatility. There used to be either a swift up movement or a swift down movement. Exactly.
Yes, yes. Clear, yes.
Any other
Hello.
question?
Yes,
Okay,
sir.
go on.
Yeah. Please, sir, can you go back to your chat box so that you can ask question?
Okay.
Yeah.
I'm there.
Oh, I thought you drew the analysis on the BTC side because I was also trying to have it from BTC, but it was not going according to the candlesticks.
It's
But
not on this that are doing. It's not on this that they are doing.
okay, so I thought you drew it on BTC.
One of these invalid. That was when I left it. Let me see. The one of BTC was invalid. Like it not follow the rule. So definitely I'm actually getting the wrong pattern here. It's not it, so because the trend was downtrend. So for this one, it's supposed to break down. It actually will break up. So it's invalid. It's an invalid pattern. Like the pattern was invalidated. Do you understand?
Yes.
So I cannot call this a symmetrical bullish triangle. No, you cannot call it that. And I cannot also call it a symmetrical bearish triangle. So remember that these patterns are confirmed that are able to break out. Do you understand? So for those that it has not broken out, you are just still speculating based on the information that you have. Do you understand? It's only confirmed when the breakout happens. So for this, the breakout happens on the wrong side, so it's not that pattern. That's what I'm trying to say.
Yes.
So that's why most times the best way to enter is after the breakout. But the reason why you can enter inside, but for this specific triangle, you buy at the support because this is a particular point in the region where it's a reaction or a pullback. So if it goes out, then it's invalid, and so your stop loss should protect you. Exactly. This is pattern. So definitely it's not the pattern we are talking about. That was why I left it. All right.
Okay. Sir.
Okay, any other person with a question? All right, no question. This is where we are going to close class for tonight. I hope you guys enjoyed the class. See you guys tomorrow.
Thank you very much. Much appreciated.
Thanks so much for the class.
You're welcome. Hope you're welcome.
Thank you so much. Good night.